Good morning, traders. It is Monday, June 9th, 2014. It's 8:02 a.m. Chicago time. I'm sure it's not morning in some of the places where you are, but I'm referencing Chicago. Trading futures options on futures and foreign currency involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. As always, a quick rundown of the overnight news, see what could affect us. News has been not so influential in the market's movement. The market's back to basically trading based on central bank action and so on. ECB's Kerr says that rates in the Eurozone will diverge from the US and the UK for years to come. China's May trade surplus bigger than expected, 35.9 versus a consensus 22 billion. That's a big blowout number for China. China's May exports above expectations at 7% versus 6.5 consensus. Imports were way below expected. Imports were expected at 6%, came in at negative 1.6%. Exports kind of buoying the Chinese economy. Japan's Q1 GDP final beats. They got 1.6% versus 1.4 consensus. That's pretty good. And then Ukraine's Poroshenko is confirmed as president. He announces that he's not interested in war. He wants to negotiate some sort of a treaty. A reminder to all traders, it is Whit Monday in Europe. Denmark, Norway, and Switzerland's markets are closed. It's a public holiday, but the markets are open in Austria, Belgium, Germany, Greece, Italy, Luxembourg, and the Netherlands. You might have noted the quieter overnight session. Switzerland obviously a big player in the markets. See what the overnight volume is here. It's hard for me to read because it's overlapping. 77,000 contracts overnight at this point. We are normally at 180, 190,000. So that we see the holiday reflected in the market. As far as what's coming out today, not seeing anything on deck on the calendar. Seeing Fed's Bullard to speak in about 5 minutes on economic outlook. At 11:45 Central, Fed's Tarullo speaks about the economy as well. And at 12:30, actually Tarullo speaks on governance. And then at 12:30 Central, Fed Speaker Rosengren, a non-voting dove, speaks in Guatemala. At 10:30, for those who are watching the Treasuries, at 10:30 today, we have a 3-month bill auction at 25 billion and a 6-month bill auction at 23 billion. Since it's Monday, let's take a quick scan of the week. Tonight at about 8:30 in the evening, Chicago time, China releases its CPI and PPI. So keep an eye out for that, especially if you're trading the Asian session. Hang Seng or whatever. The UK industrial production, UK manufacturing production come out tomorrow overnight at 3:30 in the morning. And then the US, we have US wholesale inventories and wholesale trade sales at 9 tomorrow. We have a bunch of ECB speakers tomorrow. Wednesday, we've got the UK ILO unemployment 3-month survey. And the employment change claims, jobless claims, all in the UK at 3:30 Central. We have MBA mortgage applications at 6 a.m. in the US and US monthly budget statement at 1 p.m. We have 2 ECB speakers tomorrow, or Wednesday. Thursday, European industrial production at 4 a.m. Central. And then we have initial claims at 7:30, retail sales ex auto. In the U.S., business inventories at 9 on Thursday, natural gas at 9:30, and the ECB releases its monthly report at 3 in the morning on Thursday, Chicago time. Friday, German CPI comes out at 1 a.m. Central Time, and then UK construction output 3:30. Eurozone employment Q on Q at 4 a.m. in the morning, and then the US has PPI at 7:30, and then we have University of Michigan at 8:55. This is a prelim number, expecting 83. We have, looks like one ECB speaker on Friday, and then that's it. The ECB announces its LTRO repayment program. So that's what we have on deck for the week. Not to mention that any other news or whatever that might kick in. Let's look at the markets. First, I want to go over. Where is my screen selector? There we go. We'll look at Friday day session. Here's what we've got. I know it seems like a lot of lines on a lot of info. A quick rundown for those who are unfamiliar. This is a volume profile here. The gray area is what's called a value area. It represents 30% of a fitted volume, all fitted volume around the point of control. The dark blue is the volume that occurred outside of the value area. The blue line is the mid of the session. The cyan line that's kind of edging up is VWAP on the day session. The number that you see up here is based on the delta. It's the volume that took place at that high that you're seeing there, 1948.25, traded 1178. That's a fairly weak high. The yellow line is the zigzag rotation, or the last rotation. Basically what it's measuring is from here, from the last low to the last high, you have 2.5 points. I monitor rotations all the time. The pink line here is the point of control, the volume point of control. The dotted green is the opening print of the day. The yellow lines up in top and bottom are the initial balance, or the first hour's high or low. In profiling, we measure the day's performance based on the first what has occurred in the first hour's high or low. Okay, and then of course there's this orange line, which is the prior day's close. It gives us an idea of where the gap is. So Friday closed strong, despite the idea that the market has run up all week, and the expectation was for Friday to roll over and actually start to move towards 1940.75, and it started to do so. Pretty good rotation down from 47.50 to 45, 2.5 points, and a pretty dead session. Most of these bars are 1.5 each, and it seems like a big move, but it's really a tiny 2.5 point rotation, which is normally the ebb and flow of the ES. And immediately at the mid, right off of the mid here, buyers came in on the close the last half hour and pushed to stop 2 ticks below the 1950 key strike at 1950, and then we retested that on the overnight session before falling back through, and the overnight session is currently trading 1946.50, which is the point of control. So the market's stuck where it is. So market's been on a tear, as you may already know, just constantly pushing highs from that long-term balance, from the February 14th balance, and it's just continuously from the end of May has gapped up from 1899.25 to 1903.50, and since then it has not been able to turn down and retest any of the structures below. We have a lot of weak structures below us, so the market's hasn't been ready to roll over, but it's the strength of the foundation that it has put in on this run up is questionable. I'm not suggesting that you should get short, But I think the structure here is not as strong as it could be. Point of control moving up steadily, value moving up steadily, higher highs, higher lows. The trend is firmly strong, but it's extended. By historic standards, it's fairly extended. I'm going to show you real quick. This is the monthly. Yes, this is the monthly profile chart, market profile chart. When the market has made new highs in the past, when we look since November of last year, we have really good structures. We have a good base, then it breaks higher, builds a good base, breaks higher, builds a good base. But in general, it breaks higher and it falls back into test balances, then it breaks higher, and so on and so forth. And that's why in my last week and on several days, my primary hypothesis was for selling on new highs, selling back into the prior balance before finding that doesn't make me a bear, but the expectation is it would sell from prior highs, finding balance, and then coiling to continue higher. But it has not done so. So in general, when we have an island like this, a gap and a profile that sits in the middle of nowhere, in general we come back and fill that in. So this you can see in December here, on December 31st, we made new highs on the year, and then January we came in and filled those all the way back down to finish down here in January, and in February we explored lower. And then we pushed higher. So we built a really good structure here in February by checking all the way down to November's lows, and immediately took those back and built a higher value area. You can see the green bracket here. This green bracket is the value area, and the point of control moving up. See, this is balance here. Point of control moves up. 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 And then you look at the structure that we're in now, where the point of control stayed here on balance, but at the end of May we created this gap that I just talked about at 99.25 and put in this like 3 days of some sort of an island, and with an LVN right at 1914. We tested it right at the beginning of June to 1375, and we're continuing to drift up. And this is why I'm saying the structure here is not as strong as it could be. Again, I'm not advocating to sell. I'm just basically calling it like it is, in that it isn't balancing enough to continue to sustain this kind of movement. And it's to me that's a caution. I don't know when it'll sell. We closed at the high, at new highs on Friday. A significant price strength. Now remember, price and volume kind of need to complement each other for sustained movement. But price closed at the high. But overall, the market's is left behind. If you look at these profiles, the market's left behind a lot of weak structure. There isn't the balance and the compression and volume that's generally available to sustain a move up. So I believe that on whenever the moment takes place, and on any selling that takes place, I think from here you have a decent move, a decent capacity to move to 1886 before these structures actually have the tests or the two-way auction that you would expect in order for the market to actually have a sustainable base to 2,000, 2,500, 3,000, heck to S&P 10,000. I don't care, but the structure is just not here. We again on the profile. When we look at volume on these profiles, look at the composite. It's just like these little weird nubs of volume. Just not, it's not something I've seen before, and to me, it seems frothy. It seems like the market is a little bit ahead of itself for whatever reason, and the market knows best. Participants don't go out there and invest their money buying up the next tick if there isn't something that's going to substantiate it, unless, of course, those participants are just operating out of emotion and greed, and that's what this looks like. It doesn't look like a good structural foundation for continued movement. Now, I know I'm casting doubts on this rally, and that's my intention is to basically say, hey, accept the facts. It is rallying. So price action is dictating that it's rallying. The market's in a bull as it continues higher. Not doubting that. I'm just saying that to proceed with caution and a push or a turn down does not have very much at these prices up here to sustain it or to hold it up structurally based on the auction that has already taken place. Okay, that's my point. So let's look at Friday. Friday we gapped open at 1942.50. The expectation, my primary hypothesis on Friday, was a test down into 1940.75 and then potentially 1938.50 to close the gap. Then chop, 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 then turn around and start to move back up towards the next target, which I think was 1947 right here. 1947. That was the expectation on Friday. However, Friday it opened and had a very, very small test down. We stopped 4 ticks short of the prior day's high, and we pushed up, and we started to develop weak highs here and push through, develop a weak high, push through, and we continued to do that pretty much the entire session until we rolled over to the mid. You could see it bouncing right off the blue line here before closing at the high. So again, showing the market showing its strength as we move up. So overall, Friday had somewhat of a balanced profile by the time the day was over. I don't see a trending profile here, but then again, it was non-farm payroll Friday, and the market really didn't move on the release of the number, and it just sat sideways for the session until it made new highs to extend the profile up to make it more balanced. But overall, the value area of Friday is pretty tight at 45 to 48, but it's valid. It's a valid value area. So I'm looking for, this morning, I'm looking to see if we open inside of this high volume area. Let's zoom that in a bit. If we open inside of this high volume area, and it looks like we are, we're 10 minutes away, 1946.50. I'm looking for a failed, I want to see if it fails at the 48 or the 45 and breaks, and that's the direction that I'm going to be trading from. So if it opens and bulls come in to continue higher towards 49.50 and it fails at 48, I'm going to be looking for a short to target 45, 41.75, and then ultimately the target would be 38.50. However, there's no way, I'm not saying that the primary hypothesis is for selling. I have to go with what the market has to say, but as I was doing research last night, I'm just not a believer in this rally in its current form. I just don't think this seems like a bubble type of rally rather than a sustained one. So we'll see. And the alternative is, of course, to open, test down into 1945, maybe a little bit lower, find buyers, and if it breaks the 48, then I'm going to be looking for pullbacks to trade into 1950 and whatever targets I have above 1950 based on measured moves. Next target up is 1959.75. 1959.75. I don't have very good structure for a measured move here to go off of for a measured move here, so I'm going to stick with what I already have from way back. These triangles that you see back here, and I'm going to go with 1959.75 as the next target up. So that's all I have for you for today. Some interesting structure in the Russell. The Russell has been in a balance zone from 1157 from 1157 to about 1078, and on Friday it gapped through, it broke through, and is starting to move higher. Some pretty good strength in the Russell. The Russell has been dragging behind the NQ and the ES all along, and is now joining the party. So we'll see how that contributes. The small caps contribute to this continued rally up in the market. I have the Russell here on a 50-point chart on a 15-minute. Normally you have this sort of profile. It occupies the entire screen, and Friday just a tiny portion of the screen. I like to keep the vertical scale or price scale fixed so that I don't have the illusion of big movement when there isn't any by the scale kind of adjusting. And you can see here we gapped up and we broke through the 1157 area. We opened at 1157.90, and we held prices higher in the Russell, so it's moved out of its most recent balance zone and trade that product. Same thing with the NQ. The NQ is showing significant strength and has taken out. It was a laggard for a while and has taken out the prior high and is pushing through and higher. So the indices to be moving in the same direction now, whereas before we had the Russell kind of going the other way. Okay, nothing to glean from the overnight session other than the fact that we have a weak high or weak low. Also pay attention. Oh, it looks like the Euro has broken lower. The Euro had a very, very weak low, and it's actually broken lower through 136 now. When I came in earlier, it had a weak low, and the US dollar had a weak high, and I was looking for the break lower, and we already have it. Here's an image of the Euro, and it had a weak low right here at 136.0302, and it's moved 10 pips in the last 15 minutes or so. Anyway, I'll leave you with that. I don't see any potential additional headline risk or anything like that. Just as always, be patient, watch your risk. Don't commit too much of your account to any one trade. The goal here is to have as many trades as possible so that our edge can play out. Good luck on today, and I'll talk to you soon. Take care.